Andrew, that's right. CNBC parent company Comcast just out with its quarterly numbers. Earnings coming in at an adjusted 69 cents a share. That compares to the street's consensus estimate of just 55 cents a share. Revenue was also above what the street was expecting. If you look, just about every measure was exceeded here. Let's pull out a few of the highlights here. Cable, once again, leading the way. We've known that. Wall Street's been talking about that. But these numbers really confirming that today. The company saying they had the best second quarter in 13 years for high-speed internet access. There were 323 net customer adds. By the way, that does not include the 600,000 additional high-risk or free Internet Essentials customers that received the service. So these are people who are stepping in and continuing to add for the high-speed internet. Also, cable, just the cable itself, there were 217 net customer relationship adds. They say since second quarter of 2019, they've added nearly 1.3 million customer relationships. NBC, Universal, and Sky, Comcast says, continue to face pressures that are unique to some of those businesses. Of course, you had the parks that were shut down for so long. You have theaters that can't be, that aren't showing movies, productions that can't get out. But they do say that they had the successful launch of Peacock to Xfinity TV and Flex customers in April. Then you had the nationwide launch that took place just recently, just this month. They say they've already exceeded their high expectations, and they have 10 million signups to date for Peacock. So that tells you a little bit about how they've been doing there. Sky, they say, successfully retained 99% of total customers since the COVID-19 crisis began, and 95% of their sports customers, which is kind of amazing considering how there have been very few sports and next to no sports that are out there for any of these issues. The company beat expectations by the street when it came to consolidated EBITDA and revenue, reported and adjusted earnings per share, NBC Universal EBITDA and revenue, Sky EBITDA and revenue, and cable EBITDA. They say they also beat the street's expectations when it came to HSI ads, mobile ads, and video losses. Take a look at what the stock is doing right now. It's down by about 1.25%. They say that they are continuing to offer 60-day free Internet Essentials through COVID through the end of this year, and they're also keeping 1.5 million Xfinity out-of-home Wi-Fi hotspots open for free for the remainder of the year. So a lot more to kind of dig through with some of these numbers, but those are the quick headlines on it.
I mean, the beat, as you pointed out at the top, particularly impressive on high-speed internet cable subscription that adds 323,000 versus 200,000. In terms of the revenue beat, the other one that stands out within NBC Universal is broadcast television. That was about 400 million ahead of expectation. Of course, expectations lowered because of lower advertising revenue, but it wasn't as bad as expected, 2.4 billion versus 2 billion.